Good morning, everyone, and welcome to Doc's Option Geld SPX Daily Plan. And we're going to talk about some actionable tradable levels today, where we expect SPX to go or not go, a little bit about the road ahead into the end of the year, and maybe a little bit into the beginning of the year. And if you want the full daily plan roadmap, all these, the trading view string to all do all this stuff. We have a 7-day free trial right here. You see on the screen on WHOP. Follow me on Substack. You get just a couple different things there. And so if you're interested, that's where this stuff is. Anyway, let's get to business. So very brief recap of last week. We were up, I think it was 1.4% on the week. We hit a new all-time high. Breadth was kind of mixed. That's sort of the only indicator that was not, wonderful. Volatility went from Sweet 16 to almost being a bar mitzvah boy down to the 13s. Now it's back up at 15 and change, or near 15 last time I looked. And we'll kind of talk about that a little bit later as well. And as far as the earnings front this week, there's really no major earnings. The main event for this week, the main event for this week is the minutes. The Fed minutes are coming out at 2:00 on Tuesday, which is kind of a weak main event since everybody's been out talking about it, the Fed, whatever, but that's the closest thing we have to a main event. Or in my world, the main event is the JP Morgan collar roll, that big fund with all the all those calls at 7,000 that potentially could be a magnet, but down here, if we can't get close enough, then it just becomes sort of then it loses significance. Let's put it like that. Okay, let me switch gears for a second here. Hold on. And while I'm switching gears, so just on a personal note, so to speak, where I am right now, we're having windstorms, so I may not be able to continue today. Last time we had it, the power went out, so just kind of, if I suddenly disappear, it's because the power went out. But of course, I'll try to get on my phone and do whatever I can. Okay, so here's where we are, and this is from the Substack notes. All right, so holiday shortened week, very nice stats, up 17% year to date. So about the volatility. Volatility is supposed to be low this time of year. Historically, it is. We hit the low on Friday. Guess when the last low was that we just hit? December of 2024. So it is what it's supposed to be. Overnight, we were down about 20 when I wrote it. We're down about 15. We're down close to the same 20. We've been just kind of trying to get moving a little bit. We keep trying to get moving and stalling right at this level, which price action 101 seems to be a level of significance. It's also some significance on the gamma heat map, and we're going to look at that. Okay, so the JPM roll is on Wednesday, the last day of the last day of the year. Well, it's always the last day of the month whenever they do it. And typically they execute the roll around 2:30-ish. I've seen it as early as around 2 or as late as around 3. But yeah, up good old upstate New York. And I'm near Lake Ontario. So where I am, it's only going to be 50-mile-an-hour winds or something like that. But up a little further north and west, it's going to be 70-mile-an-hour winds, basically a hurricane with snow. So yeah, a splendid time is guaranteed for all. That's a line from a Beatles song for those of you that are old enough to remember. The name of the song is For the Benefit of Mr. Kite from Sgt. Pepper's Lonely Hearts Club Band album. It's on side 1. Okay, so here we are. Oh yeah, so I just felt like I had to mention gold and silver even more so are going nuts. Now, I'm not sure how the cross asset algos play with that. And there's, short covering margin calls on silver. Silver volatility is out of the roof. So I'm just pointing out that there's these crosswinds going on that are above my pay grade or that I don't really bother getting in the weeds on, but it's good to know that they're going on and to kind of glance at your side view mirror every once in a while at what's going on with silver and gold.
And just to interject, you don't need to, just to interject, you don't need to know that stuff to make money.
That's absolutely true. Yeah. They don't need to be a jack of all trades.
Exactly.
Okay, so we have the FOMC minutes. Today we have crude oil inventory. If I want to stretch, find something to talk about. Wednesday we have jobless claims, PMI, and the JP Morgan roll. So we have a couple little things. So the restrike is on December 31st. So now I'm going to go into the levels and lines for a second. And so this is this is what the paid subscribers get, the roadmap, all the details, which we're not going to go into right now. I just want to show you this. And this was in the Discord earlier. I'll show it to you live because it might have changed a little bit. So here's the zones that we're looking at today. Nice and clean. Before you even have to worry about what these lines to the right or the left mean, just trust your eye. Okay, so 68, 60, 50 up here, that's kind of the top of the zone. From here, unlikely, but possible. Here's your upside target. If we extend 69.50-ish, here's the zone where we've been. Here's kind of the broad zone for today, the 68.60 down to, I think this is 68.80-ish. We'll go look in a minute. So here's your broad zone up and down, bounce around. You can think of it as support and resistance, but that's not really what it is. But just kind of conceptually, you can think of it that way. And with this little target here around 68.95-ish, I think it is. If that breaks, 68.70-ish. So here's kind of our intraday targets. You got this support zone down here, positive gamma market makers buy as we go down there, and that happens to be the gap fill level for those of you who worship at that church. That's a TA gap fill level from Wednesday, Thursday around Thanksgiving. We'll look at that on a chart in a minute. And so if we break that 6,900 area, then we have a new playground over here, 68.95, 6,900, and sticky in here. Here's that 69.70, which kind of would be, if it broke, it might try to get to there and kind of bounce or V or stick around here. It could easily pop back above. overhead, getting through the 69.50 new all-time high, 69.60. This cluster is going to be hard. Probably not happening today, but just to have it as like that, 3 standard deviation, you never know, mark in the back of your head. After that, we have 69.75 as the next level up, round number. No shock that there's something going on there. And that's where we are. That's the roadmap. Okay, so here, all right, so let's get back to the options that, so, okay, so that was 69.85. I didn't have the exact number. So 69.85 is where we should stall if we break. So the expected move put us down around here. It was about 20 point expected move. I'm not sure what it's actually 25 points when I looked in the morning, and we were at around 15. So the expected move puts us right in this zone. 68.90, 95, so 68.85, we don't expect it to get there. So right around 6,900 round number. If we kind of lose the overnight low, which is kind of in this area, that's where we would expect to see some reaction. And if we can get on our horse and get moving a little bit, we have to kind of get through here to get to the overnight, to get through the overnight high, which was around here, 69.15.20. See if we can get green on the day and head back up. As of right now, we're seeing weakness. Well, we'll take a look at VIX in a second, but we have our typical Friday end of day VIX drop, and then Monday morning VIX pop. So we have that standard mechanics going on. It's usually, around the 7-8% move ish. And let's take a look and see if it's acting a little nastier than usual. Let's take a look over here. So VIX is 14.85 up, whatever that is. I'm going to eyeball it and say it's around 10% or something, 8%. That's not acting crazy. Not unusual. I'm going to be doing a little webinar in the beginning of the year about how to trade VIX or not to trade VIX, but I just want to point something out real quick. And that is that when you're buying the VIX, a VIX option for January, let's say, that option is priced off of this. The VIX future is 17. So what I mean by that is if you buy a 17 strike call and it prices $2, you need VIX to be at 19 to make money. And I'll talk a lot more about that on the little webinar I'm going to be doing. And so just realize that the number you see in VIX, when we see VIX, is telling part of the story. There's a lot more to the story going on here. Let's wait till the day opens, and we'll see what the VIX 9-day tells us. The VIX 9-day is basically telling us a week out. If we go forward 9 days, then the Friday before 9 days from now, which would be this Friday, and the Friday after 9 days from now, which would be next Friday, those numbers are calculated and it's turned into a variance swap, which we'll talk about. What a variance swap is how much volatility are we going to realize or not during this time frame. forgetting delta, forgetting direction, just variance volatility. And that's what this number actually is, or what this number actually is. VVIX is proportionally low. The volatility is proportionally low to VIX, so it doesn't look like there's anything. It doesn't look like there's anything dire there. Actually, if we look at the VIX-VVIX ratio, if anything, it looks like we're kind of in a healthy ratio and not ready to drop at all. It looks when it looks like this, or when it looks like, when it's topping like this, but right now it's kind of at a normal level, 5.68 under 6, so that's fine. So nothing really, no big vol event in the future is forecast by this. Okay, I'm going to just look at one more thing here, then I'm going to turn the mic over to a few people. We're trying to be a little more structured with the time. Yeah, when I'm talking. So I go, Julie will get up, and then Val will speak. And we'll take it from there. Okay, so 69.60, 69.55 up here. So what we see here, we see a ladder up. Red is a ladder, market makers hedge in this direction. So we see a potential ladder up towards 70, towards 69.40. And you have to get through this, a potential ladder up to here, 69.55. Kind of far, kind of unlikely considering we're tanking even more now. Now, I don't know if there's headlines, we have Trump and Zelensky over the weekend. I don't know what's going on. We have this weak zone over here, the 6,900, 6,910 to 6,900 area. But we theoretically should stall out. But I'm watching this. Where is it? I'm watching this. What is that? Well, it's only a 5-point candle. Somehow it looks bigger on my screen. I guess I have my screen blown up too much. This 5-point candle looks pretty dramatic. But it looks like we're heading toward that 6,900. If I was scalping right now, that would be a target, nice easy target. And so here's the one target, 68.90. That might be a reasonable target near the open if we stay weak. The further downside target, 68.70. But we also have to take into account that there's a lot of bought options in the chain for tomorrow, for JP Morgan, stuff around 6,900. And so the real story is, does 6,900 hold or break? When we look at this, there's really not much gamma support in here. White means just kind of free to move around the cabin, with that 68.80 area being one zone with a path of least resistance. If we can get up here near the, 69.15 where we were. I guess I should have sold those futures before I went on. Okay, well, we'll come back around to that later. And that's what's going on. I'm going to put Bad Hombre on now. I don't know if you have your charts.
They're not ready, so if you wouldn't mind showing your ES chart.
Okay, sure. Let me just change it. And I'm going to go off camera, so to speak, for a second and get the E-mini string. I didn't think I loaded it. So, and I'm going to use your trader words. I have two versions, one with trader verbiage and one with doc verbiage. Okay, found it. So where are we? Hold on, let me put this in here. Let's make it white. I like solid, I like dash. Okay. And let me find the mini.
There it is.
And here we are at the expected move bottom, and take it away. What do you see?
All right, guys. So the first thing I'm watching for is going to be 69.55. Do we open above or below it? If we are, I'm going to give you guys the upside kind of thesis for now. If we can hold above it, I'm really going to start to target 69.70, and then I think it should be a little choppy on the way up, but then after that, 69.80. And that's kind of the move today. If we can get an extension from 69.70, I could see 69.85. However, I think we might be playing 69.55 to 69.70 back and forth, as opposed to an upside move.
So hold on, 69.55. Let me zoom in here. 69.55, which is basically 6,900.
Yep.
And what's your other number?
70.
Okay.
So those are the two kind of levels that I'm seeing it playing, ping ponging within each other. However, if we can hold below 69.55, I think we're going to look for 69.40 and then 69.20. Those are kind of my downside targets on the way down. After that, 6,900 ES is
Okay.
a clear.
And we get similar levels here. The expected move bottom is 69.45. So that's basically in that area.
Yeah.
And we have the next downside targets would be 69.35 and 69.25. So it's basically the gamma is kind of in that same area. Just tells us better what to expect when we get there.
Right. Gun to my head, if the weakness continues, I think it's pretty easy to expect a downside move today.
So what do you want to see to be convinced that the downside is over? Over 69.50, 55, whatever, and holding there for 15 minutes or something?
No, I think about a 30-minute candle close above 69.70, and I think downside's over.
Oh boy, you're a tough customer.
Yeah, I am.
30-minute candle and close above. Holy shit! Wow.
I've been known to front run before, but trying to get you guys to trade better than I do.
Yeah, that's that money management stuff that you guys do.
Yes, sir.
Okay. All right, cool. Let me put Vol Trader on. It's almost 9 o'clock, but we got 5+ minutes here. So let me get myself off. Oh, I didn't put Vol on the stage. Here's Vol on the stage. And I don't know if you have your
How are you doing?
Good. How are you? How was your weekend?
Was okay. I was listening to you guys, so good stuff. I might overlap with some of them, but not all of them actually. So I'll start by sharing. I'll go through 3 or 4 slides. That's it, from different scopes on the market. 1 second.
Real quick, while Vol Trader's getting ready, folks, please refer to the links that are in the description of this video. Doc has already mentioned the promo that he's doing for the monthly subscription, and they also have a promo for the quarterly subscription. That's 3 months and get an extra month free. So all that information is contained in the description of this video.
Thank you.
And just to add on to what Richard's saying, we are doing the biggest discount on the boot camp we've ever done, $1,000 off. So if you're interested in a profitable strategy where we go into it, piece by piece, that might be for you.
And so what that boot camp is an E-mini boot camp, or futures trading boot camp. Doesn't have to be E-mini. Futures trading boot camp, I guess. Money management levels, charts, system, for lack of a better word, one-on-one coaching. It's one-on-one. It's not group. It's not something in a can. And what, did I leave anything out?
It's if you're looking to trade with smaller capital using a prop firm, it's really helpful in that regard, because my strategy is low risk, high reward, and that's kind of what you want to trade if you're trading prop firm money.
Okay, good. Okay, I gotta take my stuff off. Go ahead, Val. What you got for us?
So I start through the plain vanilla structure as I see it. Green bars in the chart are calls, open interest. Purple bars are put open interest. The blue line, which overlays them, shows both sentiment and gamma hedging requirements. So we can see that under 69.15, which is the last in the money call, we basically get put dominated. So we have a downward bias in sentiment under that level. I think that we saw that level playing out pre-market on the SPX. So the implied SPX from the futures main resistance was around 69.15, 69.20. That was the last main resistance. We dumped to where we got 6,900. What I'm seeing there is that you can see the big purple bar at 6,900 here. One second. Let me go back to the screen. Okay. So where I put the X, right? That's the main put open interest. So obviously, as we hit it pre-market, we get support from it.
What strike is that? I'm sorry, I missed it. What strike is that?
6,900. And as we hit it pre-market, so obviously it gives that bounce support because there's no real gamma exposure at this time. But if they push it, then they need to hedge whatever amount is there based on Doc's option depth. Now, in terms of expectations, the expectations were actually bullish. I define it through this chart where I just marked the X in the circle. You can see that this model shows that the top side would be around 69.30. That would be like from a customer position, a preferred level to be trading and maybe supportive. To the downside, we see there's a cutoff. The model goes down and there's a cutoff right here at 68.75, a level which you guys also described. So that would be like your main, let's say we call it some type of wick, small panic down or something like that. We could hit that 68.75 if it were to start trading under 6,900. That would be the first level of support. And on the right side of this Excel, you can see where gamma concentration is from an open interest perspective, right? You get more and more negative as you drop through 69.15. And that's like the plain vanilla structure. Now, important to see here is different types of expected moves on this side of the Excel, where I just marked it green. So we see 68.85 being a first level. And then we have, if we average these two, we are around 68.70. If we average these two, around 68.70 same level that we saw here. So what I expect is buyers already hoping to buy around 68.85, and the main support being 68.75, unless the market really cracks down to the upside. If we reclaim 69.15, 69.20, we could start drifting upwards. So that's the first slide I want to go through. Now, I want to look at it from another perspective. We can see here that 68.30 is an interest level where a lot of stuff might be happening as resistance to the upside. And we see a drop off in these various models from this level. They start shifting down, all of them, and also converging into some compression level into the 69.50. That would be probably the max up for the day. So from my point of view, 69.15 and under, we are tilted to the downside. Acceleration starts if we break 6900, right? Into this peak. Again, we see in this model also the 69.75 as being the peak to the downside, right? Those numbers come again. Now, further slide, we look at this. This is basically the hedging acceleration as I see it. So the angle and the slope of the dotted lines on the charts represent the velocity, the potential velocity of things when they start hedging, if you'll have sufficient volume pushing into the trigger strikes. We can see here that from that perspective, 6,900 and above, market is stable, maybe can go a bit higher, but mainly stable. Whereas if we drop through the 6,900, which is this level here, right? 6,900, 6,890 or so, we start getting velocity to the downside, but it's much more subtle than the velocity to the upside were we to reclaim 69.15 and 20. So this again shows all of these show the same tilt, right? 69.15 and under, we are weak. 6,900 and under, we start trading down. 69.15 and above, we're okay. We start to figure out where the market wants to go and trade. As of now, it seems, we broke down. It seems we are trading lower. Final slide. So just another, pair of glasses looking at the market. And what we see here again, that it becomes positive from 69.20 and above, right? Peaking around the 69.50, and under 69.20, right? All these, the blue line is under zero, and we basically trade, we're negative in terms of, the full complex of the hedging and everything else. So to finalize, as long as we don't reclaim 69.15 minimum, 69.20 better, market is has a downward drift, which could accelerate as we go down through 6,900 SPX. That's pretty much it.
Let's answer this question. I'll kind of go first, and you can answer it too about structures.
Okay.
And first, let me start with my general disclaimer that how one analyzes or what one's view is should determine what structure you use, or put it a different way, the structure should fit your view, whatever structure you like to use, and the structure is not a strategy. I wrote about that. Iron butterflies, a iron condor is not a strategy, it's a structure to express a view, and you can express lots of views with it. Okay, that said, so I'm going to start this way. So longer term views, I like butterflies. I'm a cheapskate, I like flies. So here's one for January. What is it? A 50-watt fly. And it's sitting there green, it's doing okay. But notice it's green. because the body of the fly has decayed. Now, if we can get up in here, then the convexity up into the 75. This could get green and this could stay red. That would be beautiful. That's kind of the sweet spot. So I like flies for longer term views and even intraday for directional trades. I'll sometimes buy debit spreads or whatever. So I like flies, and I also like iron condors. I mean, that's kind of what I do. So I don't have any iron condors on for today. On Friday, I did a small starter Friday to Friday, and it's down $46. And I'm not really concerned about that. I'll probably add to this side over here. And this is ready to go bye-bye. The calls I sold are ready to go bye-bye. So what I'm going to do right now, cancel replace. Yeah, okay. So that they're going to close at the open. Maybe I'll give them 20 cents to get them out of the way. I feel I'll probably do that. I'll leave it till we open. I'll give them 20 cents to make sure that they get taken out of the way so I can start another setup there. And so since we're talking about that, SPX Monday. So I don't have any trades for today yet, but let's take a look. As you can see, I got SPX trades all over the place. Why don't I show something here but not there? I might have an orphan laying around somewhere. Oh, I have a fly. Okay. I have this fly here, 6,900, 69, 6,900, 6920. I have like a 20 wide fly here. It was pretty green before. I'm not sure what it's going to look like now. It was cheap, so I don't really care about it. So, okay, so we're talking about flies to express iron condor to express a view. So both of us see that 70-75 area as a potential downside target. We have that gap fill, that famous gap fill down around 35.40. And so 50 round number. I like to be away from the round numbers. So, wow, 70 cents they're giving me for that. Expected move 27. That doesn't sound right. 2 delta. That doesn't sound right. But I kind of like this level. So I'm willing to start off with 5 of them as an opening salvo. See there, that 68.80 that we talked about, it keeps getting targeted here. Now what I might do, and just for fun, we had that 80-75 area, right? So let's look at a fly. Maybe 90. Let's see what that looks like. 70 cents. I'll buy one. See if I get 70 cents. I might change the levels a little bit. I'm going to look more back to over here. So this is going to be hard to break through. 68.85. So really, I want to sell in there. Really, I want to sell what's going to get hard to break through. So let's just kind of change the fly a little bit. Fly, butterfly. Let's see what 95, 85, 75 looks like. That's a buck. A little more expensive. 90 cents I like better. See if I got one for 90 cents. To the upside, I already have a fly as far as selling calls for the Iron Condor. I don't like anything here yet. But gun to my head, I would want to sell the 55, but they don't want to pay me for it. What I'll do as a placeholder for myself is I'll put in 5 at 55 cents. So in case we get an up move and I'm asleep at the switch, whatever happens, and at the same time, I'll see the prices when I look over here. I'll see the prices over here, and I'll be able to make adjustments. So that's how does that answer your question? Also, I have a diagonal somewhere. Where's my diagonal? I have a lot of different things on, so I think this might be my diagonal. Yeah, here I have a diagonal on. A van, 9th van, 12th. And so I also play diagonal. So what structure? Answer is it depends. Here's a VIX structure. Always flies the way I trade VIX. Have a little bit of extra short stuff on top. So you have to know how to control your margin. But even for this whole mess with all these shorts, margin requirements, only $1,000. Now it can blow up on your face, but I mean, I don't think we're going to 39. And so that, hopefully that answers your question.
Doc, I'll just say,
Go ahead, Richard.
I just wanted to add to the viewers who are watching, you should go back to this video and watch the last 5 minutes, because the reasoning that he just shared there is, it's a nugget, it's gold, 100%. So definitely earmark this timestamp here. Go back and watch how he just reasoned through that fly and through those credit spreads. And that's what he's all about. And it's here on YouTube for free every day, 8:30. So I just wanted to point that out, Doc. We're coming up on about 45 minutes.
Okay, so we're going to wrap it up in like 2 minutes, let's say. Let's try to keep it to 45. Okay, so whatever's causing this weakness, I don't know what it is. Doesn't matters, but it doesn't matter. What matters is we have the 6,900 trying to hold and undercut and reclaim. Sure, why not? Why? We have 68.90. That's where we're supposed to go to. So we're supposed to get to convexity toward here and then stall out in here. 75 round number, 70 number, next one. So again, a 90, 80, 70, also not bad. But so you might want to get the convexity to the 68.90 by buying it, or the 95 being a little bit of above it, so you catch it and it can get in the money, but then you just have to, depends what happens in here. So there's a few different ways to play it. You can break the wings. Of course, you can just buy a put or a debit spread, play it straight, so to speak. So yeah. Okay. Hopefully that answered your question. Val, any closing comments? I know you like to play with diagonals and totally different kind of structures.
Not really too much. Skew pretty flat. They sold a lot of calls Friday, so they did they did some flattening at the top end of the skew on the call wing, out of the money. I do want to point out two things though. We just a couple of hours back, news came out saying SoftBank buying Bridge Data. What's their name? Buying 1 second. So they're buying Digital Bridge. Now, that is an AI infrastructure type of trade. Interesting is, though, that it's currently trading at 2.75 billion, and SoftBank buys them for around 4 billion. So there's like a gap there. I'm pointing this out because we haven't heard anything good news lately on the AI, and now suddenly you have this big trade coming out. Also, we haven't even seen the Qs. The Qs are super bullish on from the structure. A lot of calls sitting at 624, 625 and over, like very if you look at it from a put call ratio, so the puts are only 46% of the complex for today, 0DT. So very bullish there. They came very bullish, and that should be somewhat supportive as to how much this market can go down. So obviously we mentioned anywhere between 68.90 and 68.70 to the downside, which I believe that would be the downside. But I just want to mention out, we're starting to hear some deal news on the technology sector, on the AI thing. If you start getting some positive inputs from that, that might play in later on today, and we'll cap the downside to the levels we spoke about.
Okay, and getting to this question here, a broken wing fly for credit, 1 DTE. And see that now that I set it up for 0 DTE, you want 1 DTE. Let's see. Okay, I'm gonna put this in anyway, just for fun. 1 DTE, I would have to look and see what's going on in the chain for tomorrow also. I don't want to just kind of make something up. So I would have to analyze it. But for tomorrow, I would want to be selling up here near 70, 75. I would want to be long into this 30 to 50 area, depending. And then I'd have to structure it to get a credit, or depending, if you want to run for a credit, I'd have to kind of structure it. So it'd have to be not only broken wing, but asymmetrical, where you're selling more. It's not a 1-2-1. It might be a 1-3-2 or a 1-4-5, or whatever the ratio would be to get you a credit. $45, $50, $65-ish. Let's take a look. Here, you got me sucked in. I don't know if we get a credit for that, but let's see. 45. All right, so you're going tight on your 45, 50, 65. That's not bad. Okay, you're going real tight on your 5. That looks good. I got no problem with that. I'll put one in. I might mess with it a little bit. So if we wanted to, just for fun, if we did a 10, say, once you do 10s, then you start having to do the asymmetrical stuff. Okay. Yeah, it's tight. It's tight. That's why I'd have to play with it, and we do this kind of stuff in the Discord. We sit around and we build structures and we talk about it. We look at the vein and we look at charts and we look at gamma and all that kind of stuff, and we see what we can figure out. That's part of the fun. Anyway, I'm going to go. I promised I'd be off by 9:15, so I lied by 5 minutes. And click like and retweet and restack and reshare on whatever the YouTube variation of that is. Questions, comments are always appreciated. And check out the Substack. There's a free and there's a paid. Check out the free Substack if you like. Check out the paid one. I think you'll like it more, but you know, where is it? Here we go. Here's a Substack. Here's a WHOP with the special. Same content, both places. Options Depth, the platform that I use. It's this guy, 15% discount if you're a Gamma guy or gal. I may not get canceled here. And Happy New Year to everybody, and that's it. All right, take care, everybody.
See you guys in there. Good luck.